Hello everyone, this is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you the day's scheduled events for Wednesday, March 16th. Well, it's a really big day today. The focus in early European trading will be squarely on the pound. At 9:30 GMT, we start off with the UK labour market data for January and February. This will form the backdrop for tomorrow's Bank of England Monetary Policy Committee meeting. Figures are expected to show a steady improvement in the labour market, including a slight uptick in average weekly earnings. Normally, this would be a major indicator for the UK, but today it's likely to be overshadowed by the budget. At 12:30 GMT, Chancellor Osborne will announce Britain's 2016 budget. Now, pre-election budgets are generally giveaways that aim at boosting the economy and the popularity of the ruling party, while post-election budgets, which this one should be, tend to be cleanup budgets, where the winner tries to get all the restructuring pain out of the way as soon as possible. Furthermore, Chancellor Osborne has pledged to bring the budget into balance within the life of this Parliament. However, it's not politics as normal in Britain right now. The upcoming Brexit referendum is far more important than any election. That's why I think winning the in-vote will take priority this time around. At the same time, Osborne can't just abandon his fiscal target in order to win the vote, so it's going to be a tricky balancing act. I'd expect to see a fairly neutral budget, one that's less restrictive than usual for the first budget after an election, and perhaps also less restrictive than Chancellor Osborne might prefer, but by no means in the giveaway category. A budget that makes it less likely Britain will leave the EU should be positive for the pound. So I'd expect consumer sentiment in the UK to rise after the budget and for the pound to gain as a result. Now, at the same time as Chancellor Osborne is speaking, a host of indicators will come out from the US and Canada, including Canadian manufacturing sales, US housing starts, US CPI, and US industrial production. But I wouldn't expect much response to these as the market waits for the results of the FOMC meeting at 1800 GMT. Now, the market's revised up its expectations for the path of Fed tightening considerably since the 11th February bottom, as you can see here. Nonetheless, I still expect the Fed to surprise the market by forecasting greater tightening this year than is currently priced in. The January sentiment said that, quote, the committee is closely monitoring global economic and financial developments and is assessing their implications for the labor market and inflation and for the balance of risks to the outlook, unquote. This time, we may well hear that the risks to the outlook are indeed more balanced and that further rate hikes are likely this year, a view that should be backed up by the dot plot. I expect the committee members to lower their forecasts in the dot plot, but to retain at least 2 rate hikes this year, contrary to what the market expects. Now, one possible surprise, Chair Yellen could get a question at the press conference about the possibility of a rate hike in April, when there's no press conference scheduled after the meeting. She's previously said that the FOMC can move during such months, and I'd expect her to repeat this fact, which could make people rethink their views on the possibility of near-term tightening. Net-net, I expect the FOMC decision to cause the market to price in a greater chance of further tightening this year and for the dollar to rise as a result. Now, you might think that's enough for the day, but we're also getting New Zealand fourth quarter GDP, Japan February trade, and Australia's February employment data. Please see the full report on our website for comments on those indicators. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.